talk about that in just a bit. Gold also advancing right now, pushing higher after the dollar also declined. And that's also something that you're seeing coming in. And other than that, of course, you do have investors seeking safer assets amid that escalation and conflict that you've seen coming in as far as gold is concerned. Other than that, when you talk about prices for silver, also trading with gains. So that's broadly the kind of setup that you have. But Ajay Kedia, Director, Kedia Advisory, is also joining us on the show. Mr. Kedia, a very good afternoon to you, and thank you so much for taking time out and joining us. It is a fabulous week to be talking to you. And I say that because it's been quite the complex moves that we've seen as far as commodities are concerned. There's still a bit of volatility, but it does look like upward momentum really seems to be, gaining shape right now when you talk about oil and even gold as well. But first, let's talk about gold prices, because it's looking like the dust has finally settled. Do you think that these are just fundamentals, or these are just hiked up safe haven bets at this point in time?
Very good afternoon, Shajit. See, first of all, whenever there is any geopolitical tension or any term like this, so generally we see an immediate reaction in gold prices as a safe haven. On Saturday, as escalation has started, we were expecting the prices should be moving towards $5,700-$5,800 mark, at least a new high. But on the contrary, we have seen gold prices and silver prices open slightly flat to positive, then corrected. That clearly shows that whatever the war premium that has been already been absorbed in the market. And secondly, whenever this type of geopolitical tension comes, sell-off in equity market has been seen. To make this losses good, generally we see this type of pullback in gold and silver. But up till now, as gold is holding about $5,000 mark, we may see support continue to be there, but be cautious, because it's not like Russia-Ukraine war that has been continued from last 4 years, because Iran, US, Israel, this is a very consecutive situation in Middle East. So we don't expect, or even market don't expect, this will be escalating more than 1 week or 15 days. If it is so, any de-escalation point comes, definitely we can see a sharp correction in gold and silver also. But as of now, above $5,000 mark, we may see prices moving to the level of 54 as of now.
Mr. Kedia, yes. Are you willing to put a number to that pullback that you're talking about right now? When you talk about that pullback on a de-escalation, what is the kind of estimate that you're keeping in mind when it comes to that particular pullback that you're talking about?
One thing is very much clear: whenever geopolitical tension, gold will get a support. So already in the month of January, we have seen geopolitical tension, central bank buying, ETF buying, that has made gold to test a high of 5,600. So as of now, on upper side, we are expecting 56 to 58, 50 if this geopolitical tension continues to be there. But slightly be cautious. A break and hold below 5,000 level mark can find the support at 4,400 or even 4,150 as of now. Because ETF in the month of Feb, we have seen initially the numbers was quite good, but now with the volatility, the demand is been slightly diminishing, and profit booking has already started triggering in the month of Feb. So slightly be cautious. A downside support could be 44, 44.50 as an immediate, or near to 41.50 we can see.
Right, no, absolutely, and that's also quite interesting in terms of the way that the entire situation is right now unfolding as well, Mr. Kedia. But when you talk about oil prices, I wanted to also get a sense of what you think about the movements on that front as well, because the geopolitical risk premium that you've mentioned, or the war premium, for the benefit of our viewers, that's also very much there, especially with the kind of the situation that is unfolding when it comes to the Strait of Hormuz right now.
I think we have seen already Russia-Ukraine, but Strait of Hormuz is one of the most choke point, because globally 20% of oil move from this choke point. And as we know, already particularly for India, that will be a double whammy, because earlier we used to import from Russia and now we have shifted to Venezuela and other countries. But this is the route which has been impacting everyone. And almost we have seen the Fed has gained, and even the we can say insurance premium has been continued to be on higher side. So slightly concerns would be there for crude oil. If this extension would be more than 2-3 days from here, maybe we can see prices moving to the level of, let's say, $90-$95 also. But any de-escalation could be again finding the support at $70, because we have been oversupplied since last 1 year. OPEC is trying to push more production in the market in the month of April. But timing, it's important that this geopolitical tension should not exceed more than a week. Otherwise, it will be impacting for India also, for global market also. Maximum higher side, we may expect 90-95 if this escalation continue to be there for next 1 week period.
No, absolutely, and it is very clear that it could be possible that if there's a de-escalation, then you'll see a very sharp reversal in the kind of moves that we've seen as far as the entire commodity complex is concerned. But keeping that in mind, Mr. Kedia, all things constant, of course, seeing that these triggers are something that you're looking away from, if you were to do that, and if you were to take a look at the moves coming in for oil, gold, as well as silver, all three of them, very quickly, anybody who's already placed bets on the table, especially when it comes to the precious metals complex, what do you think they should be doing at this point in time?
Right now, market is trading with a high volatility, margins are high, and we don't know whether this de-escalation will start immediately or it will take time. Yesterday, there was a report from some reputed newspaper, but after that, it has been revoked. So unless and until there is a clarity, better stay away, because see, gold like commodity has given a return of almost 125% in last 1 year. Silver has given a return of more than 300%. So I think here the war premium is important. Secondly, the return has already been made, because this war-like situation is not new to the market, particularly for gold and silver. We have witnessed around 6 to 7 war in last 4-5 years. So I think one should not make a long-term position at this level. Maybe for a speculative move, we can buy near to 5,100, put a stop loss of, let's say, 5,000, around 5,400, you should exit. But this is not a right time to add in portfolio gold and silver time. It may support because of safe haven against equity. What we have seen up till now, equity market is dropping and gold is steady to positive. But this is not a time to add in portfolio and sit for next 1 year period.